Financial statements are key to analyzing stocks and identifying excellent investments. The balance sheet is a financial statement that shows a snapshot of a business's financial position at a certain time. Unlike the income statement, the balance sheet doesn't show financial information for the whole year. Instead, it shows financial information at an exact moment in time. Think of it like if you were to screenshot your bank account balance or loan payment balance at a certain point in time. The purpose of the balance sheet is to show shareholders the amount of assets, liabilities, and owner's equity the company has on the date the balance sheet was prepared. Here is Tesla's balance sheet from their 2019 annual report. The first thing to notice is that every balance sheet has 3 sections: assets, liabilities, and owner's equity. Assets are the items a business owns that will hopefully generate income for the business or help repay their debts. Some examples of assets are the manufacturing plants for a car company or even cold hard cash. Liabilities are the amount of debt the business owes. Owner's equity is the amount the owners or shareholders of the business actually own on all the assets after the debt is paid. For instance, if a business goes bankrupt and their factory is worth $1 million with a $500,000 loan on it, the asset is $1 million, the liability is $500,000, and the owner's equity is $500,000. The balance sheet uses the equation assets equals liabilities plus owner's equity. Now we'll dive into Tesla's balance sheet from top to bottom. All of these values are a snapshot of Tesla's position on December 31st of 2019 and 2018. The numbers are in millions of dollars, so the number 1,000 represents $1 billion. The first of the 3 sections is called assets. Again, these are the valuable items the business owns that hopefully help generate income. The assets section is separated into current assets and non-current assets. Current assets are assets that are expected to be used or sold within a year. Non-current assets are the opposite and are considered more long-term. Under the current assets, the items are listed based on how easy it is for them to be turned into cash. This is known as how liquid they are. Cash and cash equivalents are first because they don't have to be sold to be turned into cash, so they are considered the most liquid. Cash is just the money the business has in its bank account, and cash equivalents are treasury bills or notes that the business owns that pay interest. If you don't know what treasury bills and notes are, they're basically a low-interest savings account for the business. Restricted cash is the cash the business has set aside for the future year to pay for specific debt repayments, equipment purchases, or investments. The restricted cash cannot be used for any other purpose than for what the business lists. Accounts receivable is the amount of money that is owed to Tesla from buyers that have not yet paid. Some buyers of Tesla's cars or energy products may not have paid in cash, but instead used credit to pay Tesla. Hopefully, this amount will turn into cash, but it's likely that at least a small part of it will not be converted to cash since some buyers won't pay. The inventory is the finished cars, car parts, energy products, or Tesla shorts that are ready to be sold. These could likely be turned into cash relatively easily and will probably be sold within the year. Prepaid expenses and other current assets are the insurance payments or rent payments that Tesla has already paid before they are due. At the end, you will see the total of Tesla's current assets is $12.1 billion as of December 31st, 2019. The next part of Tesla's assets is non-current assets. The non-current assets will probably not be used up or sold within the year. The first non-current asset is called operating lease vehicles. Tesla leases some of their cars, so this number represents the estimate of the car's value after the customer's lease is finished. The solar energy systems are the solar panels Tesla leases to customers for their properties. The property, plant, and equipment represents all of Tesla's manufacturing plants, machinery, and administrative equipment it owns. The operating lease right-of-use assets is the factory land that Tesla has been granted the right to use by private individuals or governments. It's basically the long-term value of the land contracts of some of their factories. Tesla's intangible assets are all the patents, trademarks, or copyrights they own that other businesses can't use. Think of the Tesla logo or the designs of Tesla cars. The next non-current asset is called goodwill. Goodwill appears on a balance sheet when a company acquires another company for more than the recorded owner's equity value. For instance, Tesla paid more for the ownership of SolarCity than their balance sheet said there was. If the equity value of SolarCity's balance sheet was recorded as $100 million and Tesla paid $200 million to buy the company, they would have to put $100 million of goodwill on their balance sheet. The net restricted cash is the cash with restricted uses for more than a year. The other assets are financial products that Tesla uses to protect themselves from foreign exchange rate and interest rate changes. At the bottom, you'll see the total of all the assets, current and non-current. Tesla's assets totaled $34.3 billion on December 31st of 2019. Liabilities are the debts Tesla owes to creditors. Debt can take many forms and can be from banks, suppliers, or even customers. Just like current assets, current liabilities are expected to be paid within the next year. Accounts payable is the amount Tesla owes to other businesses or customers for a product or service Tesla has already received. Instead of paying in cash, Tesla paid in short-term credit. Accounts payable is the exact opposite of accounts receivable. When one business has an accounts receivable balance from another business, the other business will have an accounts payable balance to the first business. Accrued liabilities are the rent expenses, equipment leasing payments, and various other scheduled payments to be paid for the daily operations of the business. Deferred revenue is the money customers paid Tesla for products or services that they have not yet received. For example, the reservation deposits for the Cybertruck or Roadster can be considered deferred revenue. Resale value guarantees are the amount of money Tesla will have to pay to other companies that are leasing some of Tesla's products for them. It is the amount of money that will be paid to the other businesses when the leases are finished. Customer deposits are the prepaid maintenance plans or services that customers have paid for when they first bought their cars or energy products. The current portions of debt and finance leases are the amount of money Tesla has to pay on their long-term loans and debt obligations within the year. These are the loans issued through banks or corporate bonds that are used to help keep Tesla alive since it still needs debt to fund its business's operations. Here you will see that the total of the current liabilities for Tesla was $10.6 billion on December 31st of 2019. Next comes the non-current liabilities, which is the total debt that is owed, excluding the payments that will be made within the year. As you can see, these liabilities are the same as the ones above, except they are the total amounts due after the current portions of the debt have been paid. At the bottom, you'll see a total of $26.1 billion for all the liabilities Tesla has. The redeemable non-controlling interests in subsidiaries is a liability that means someone can redeem ownership in a part of Tesla's business. For instance, Panasonic owns part of some of Tesla's manufacturing plants, and they are entitled to some of the ownership of Tesla's business if they want to redeem shares in the future. The last section of the balance sheet is called owner's equity. The best way to understand this part is to think about the worst case scenario for a business, bankruptcy. When a company files for bankruptcy, the assets of the company get sold off to get the most amount of money possible. When the assets like property, manufacturing plants, and equipment are sold, the people who get paid first are the employees, customers, banks, and bondholders. All of the liabilities will be paid first before the shareholders of Tesla get anything at all. If there is anything left over, the amount that is left over is called the owner's equity. From the accounting equation, since assets are equal to liabilities plus owner's equity, assets minus liabilities are equal to the owner's equity. This amount is what the owners of the business should expect to receive in a bankruptcy if all assets can be sold for at least the amount that they are recorded on the assets section of the balance sheet. On Tesla's balance sheet, additional paid-in capital represents this amount before considering the income or loss of the business. The accumulated deficit is the amount of money Tesla lost in their prior year. Unlike most young growth companies like Tesla, most mature companies have something called retained earnings. Retained earnings are the amount of earnings the business kept internally after subtracting any dividends they paid out to shareholders. Finally, you will see Tesla's total stockholders' equity of $6.6 billion as of December 31st, 2019. Stockholders' equity is also referred to as book value. and it represents the actual value of the ownership of Tesla's stock. Tesla is currently valued far above its amount of book value on the balance sheet. As of late 2020, Tesla's equity is valued at over $500 billion on the stock market. Most businesses trade at a higher price than their recorded book value, so book value alone doesn't necessarily mean that Tesla is overpriced. More analysis must be done to determine Tesla's fair value. After all, it's all about how much cash the business can produce in the future for the price that you pay. So, Tesla's valuation is a whole other topic for another time. At the very bottom, you'll see the total for the liabilities and owner's equity. You can see that the total of $34.3 billion is the same as the total of the assets above. This is what makes this financial statement called the balance sheet, because these two totals always have to balance. There are a lot of important ratios and methods to analyze a business's balance sheet to figure out if it is a suitable investment for you. Accounting is a language, so to start analyzing the language, you have to know how to read it. That's basically everything you need to know to start reading and learning how to analyze balance sheets for your own investing research. I hope this was helpful. Please leave a like and subscribe if you want more content like this. Leave any comments or questions you have down below, and I'll see you again next time.